What is going on, everyone? My name is Kenneth Beard. I'm back here with another video. And today I wanted to make a video on how to make 20% a month using credit spreads. As you can see, I have a very short list of rules that you got to follow if you want to make 20% consistently using credit spreads, selling options. Like I said before, I love selling credit spreads. I love getting those small gains and letting them compound because that's the most consistent way to make profits in today's market using options. A lot of people love buying options. They love scalping options. They love swinging naked options on the buy side. I personally have no problem with anyone who loves to do that. But if you're like me and you may not have all the time to sit in front of the screen for hours at a day, or maybe just a couple hours, if you don't have time to do that, and you got a full-time job or whatever predicament you may be in your life, you don't have the time to sit there and manage aggressive positions. Well, I'm gonna tell you, credit spreads is the way you want to go. This is how you're gonna make consistent income. This is how you're gonna grow your portfolio to multi-million dollars. I've seen people do it before. I've seen success in credit spreads. Every single time I trade them, I see way more success than what I do when I buy naked options and look for a home run play. All right, y'all. So let's hop straight into this. Like I said, I got a short list here. So how to make 20% a month. So to make 20% a month, let's say you got $3,000. You need to make 300 per week. 300 per spread, or 150 a week. So like I said, 300 per spread or $150 per week. It's not that difficult. 2 trades can make you 20%. So I'm gonna hop on my TD Ameritrade and give y'all a little example real quick. We got SPX up here. Let's say you got $3,000, right? So let's I already got everything up. So let's say we want to trade this, right? Let's say we see SPX. We broke trend on SPX. SPX was seeing a uptrend here, and let's get rid of this. SPX was seeing this uptrend here. We broke trend, and now we're heading back towards support at 3,900. 3,900. So we're coming down here, right? So let's say, okay, we had a nice little break through the 20-day simple moving average. We came up. We did a measured move back towards the downside. Couldn't rebound from here. Now we heading lower, right? So let's say hypothetically, okay, we see this heading lower, but it's some support right here, because you see we got previous resistance turned into support. So what's gonna happen next? Well, we're gonna see a little bit of support down here. We're gonna see something even right here, even right here, even right here, even right here. You want to look for these key levels, right? So let's say, okay, all right, bet. I'm a bet that SPX isn't gonna go lower than $9,300. $3,900. Let's bet that. Okay. Well, what we're gonna do is we're gonna do some put credit spreads. Now, on the front end, we may start losing money because we still got a little bit of room down here to 3,900. But I wouldn't risk doing a call credit spread up above here, because let's say, okay, we think the market is going to fall, so we do some call credit spreads like 2 weeks out. It's a very high possibility that we may get down here and bounce and come up. So I'm more comfortable, because we're closer to support, I'm more comfortable playing the upside on this rather than the downside. We've been in an uptrend, we've been rebounding. So most likely, we're going to see some support, and we're going to either consolidate sideways or keep going up. Now, if something catastrophic happens and the market starts bleeding through these levels, well, that lets us know that our assumption is wrong and that the market is just getting back in that weak territory again. But as of right now, the market been looking pretty good. So I'm gonna bet that we're gonna defend against that 3,900. Excuse me. So what we're gonna do is, what's a safe area to play some put credit spreads at here? I always, and this is the next point on my doc that I have here, I never trade above the 25 delta. Why? Well, 25 delta keeps me at a pretty safe distance. 73% chance that this stays out of the money, right? Or a 25% chance that it goes in the money, right? So, I want to keep my eyes. So, it's a 1 in 4 chance, or every 4 trades, one of these may go in the money at expiration, right? So I'm comfortable with that. That's a pretty low probability, in my opinion, that we're gonna get down to this area. So I'm gonna go ahead and sell here. So if you're using TD Ameritrade, which is what I use, you're gonna just right click here on the ask, or you can right click on the bid. It's up to you. Click vertical, and it's going to automatically do 5 with, 5 with credit spread, 5 strikes apart. So you're selling the 310 and you're buying the 3805, so the 3,810, and buying back the 3,805. You're gonna receive $1.25 in credit, and you can see that the mid price is $1.25, and that's what we're gonna stick. We're always gonna stick with that mid price. Even like TD Ameritrade, you can't really go anywhere besides the mid price here. So if you see, you can see if you sell 10 of these, you're gonna collect $1,200, $1,250, and then the max loss, the collateral that you have to put up is $3,750. So that's a pretty good return, in my opinion. That is a, let's see. My math ain't good, y'all. I ain't gonna lie. I'm not smart like that. I ain't a math genius. And this is what I'm talking about. You don't gotta be a math genius. You don't gotta be, you know what I'm saying, a brainiac, freak, rocket science to make money in the stock market. You don't. So that's a 30% return in 16 days that you're gonna receive just from, selling put credit spreads. 30% return. That's if you have maybe like 4K, but we're trading with a $3,000 account, so we don't have that much money. So we're gonna go to 3 right here, and guess what? You get $345 right here. That's more than what you need, right? So 150 a week, 300 per spread. So that's more than what you need to get that 20%. Boom, right there. Enter in this trade, and we let it work. Now, what's my next thing I got going on here? The max loss should not exceed 70% of the max profit. So this is a rule I want to keep in mind, because, like, obviously we don't want to realize max loss. That's unacceptable. This should never happen. You should never realize max loss. And the only way you're going to do that is if you close in the money at expiration. So that shouldn't even, like, if that happens, you weren't paying attention to your trade at all. Like, you just put the trade on and left for a month and came back and you didn't care. Obviously, it was just money for you to blow. Or you just don't know what you're doing really when it comes to mixed risk management. So I'm going to teach y'all right now how to see the risk management and know how much you're willing to risk, right? So we're going to go to Analyze Trade. And right here, we can see this is the price we at right now. 39.35 or around there. See 39.34. So we're around that price. So let's do the math, right? What's 70% of 360? $252. So you don't want to exceed. I say that's a little bit too much. $200 right there. You don't want to lose more than 200 on this trade. You don't, because like that's just too much money, in my opinion. It's all up to you what you want your risk management to be. But me, I don't even want to lose that much. I say 150 for me. So like, where does the stock have to drop to on the day we close this trade? Because obviously, as this trade goes on, like you're not gonna lose as much money. So on the day we put the trade on, which is the 12th, if our stock drops to, I'll say 200, the stock will have to get to 3,868. So if the stock drops around here, then we on the day that we sell the spread, no theta decay or nothing, then we lose that much money. So if I close the trade on Monday, open this trade on Monday and it drops down here, then boom, we out. We close, we stick to our risk management rules. But it's the chance of that happening is pretty unlikely, you feel me? Unless it's something crazy that happened. So let's say in 4 days, 1, 2, 3, 4, if it dropped to that same price, let's say 200. Let's go back to 200. So now we got to drop even further to 3,856. So now we got to drop all the way down here. So you see how credit spreads work, and then so on and so forth. And the more days that go by, the further the stock got to drop for you to lose money, because that's the beauty of a put credit spread. So as long as it stay above your short strike, you're good. So just keep that in mind. Don't get freaked out if the stocks start dropping, you start losing money. In my opinion, I keep that 70% rule. I don't want to see more than 70%, because I just don't. I want to be as safe as possible. So that's how I'm going to run these. That's how you should run your credit spreads. Close all trades out at 80% max gain unless you are at a 10% delta or lower within the last week. So go back to the option chain. So the delta is all the way down here. Okay, we got some good profit in, right? We got 90%. We 90% out the money right now. Okay, let that trade go to expiration. I say just collect all the premium. You know what I'm saying? Now, if we had 5%, all right, then close the trade out because you don't really got nothing left. But if we had 10, let it expire some more. Let it go some more. You good? You in the safe zone right now. Don't really worry about it too much. But if you're at 5, I'll just close the trade. Anywhere below 5, just close the trade. It's not worth it having this too. So yeah, that's it. Simple rules plus simple profits equals consistency. That's how you make money in these markets. Not trying to scalp everything, not trying to play earnings on every single play. You want to keep it easy, you want to keep it simple, you want to keep it consistent. And that's how you're going to make money. That's how you're going to compound your account, making 20% a month. And watch how your account grow. I'm telling you, it's going to be crazy. I'm on this road right now, so I'm just sharing, my opinion, sharing what I'm doing. I'm sharing my goals and what I'm looking for, how I trade with you all, so that maybe you can gain some knowledge from it. And that's about it, man. So if you like this video, leave a like, comment, subscribe, share this video with other people that you may see struggling in the markets, buying options, letting theta kill them. I've been there, done that. But yeah, like I said, share this video with those who are interested in the stock stuff. I'm into the stock stuff. We'll change my channel name to the stock stuff. And yeah, that's it, man. I'll see y'all boys in the next video. Appreciate it. Peace.